Global stocks have seen a rocky start to the year 2022, led by rising volatility in US shares. A barometer of the uncertainty within markets, the VIX index, or known as the fear gauge, saw volatility levels spike as much as 93% in the month of January. Find out how put warrants work and how you can use them to hedge against the continued volatility in February. Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves. It has been a volatile start to the year 2022, with markets rallying in the first 2 weeks of January, before seeing a rout in the final week of January that erased all initial gains to enter into bear market territory. In the early part of January, Hong Kong indices and stock names had enjoyed a big rally. During the 1 week period of 5th to 12th January, Macquarie's Hang Seng Call Warrant UHIW, for example, rose 145%, with the Hang Seng January Futures Index rallying 6.2% from the 22,992 level to 24,322. Macquarie's Hang Seng Tech Call Warrant SRWW had also spiked 180% with a 10.7% rally in the Hang Seng January Futures Index. Investors should note that leverage works both ways. For example, investors who had purchased put warrants during the period of 5th to 12th January saw magnified losses of up to 75% as well. The optimistic start to the year quickly gave way to geopolitical fears between Russia and Ukraine, concerns on the Fed's announcement that they are likely to end bond purchases and hike interest rates in March, as well as worries of slowing economic growth in China. From 20th to 27th January, Chinese stocks listed on the Hong Kong Stock Exchange fell as much as 17% over 6 trading days. Macquarie's put warrants tracking these names gained between 40 to 150%. Call warrants fell as much as 76%. Looking into February, investors will be closely watching out for any escalating geopolitical tension between Russia and Ukraine. Those who fear a further sell-down in the short term and wish to protect themselves against falling prices may consider hedging with put warrants. Put warrants allow investors to potentially earn a profit when the underlying falls. Unlike call warrants, whose prices tend to move in the same direction as the underlying, put warrants tend to move in the opposite direction to the underlying, increasing in value as the underlying falls and decreasing in value when the underlying rises. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by scanning the QR codes and subscribing to our channels on YouTube, Telegram, and Facebook.